Earlier, I interviewed Charamporn Jotikasthira, the President and CEO of the Stock Exchange of Thailand. We spoke about a range of subjects, from the protests gripping Bangkok this week to the impact on Thai financial markets of the eventual end of the US international bond buying program. We also spoke about his vision for Thailand to become a regional trading hub as Southeast Asian economies integrate. So what have been the impact of the protests on the Thai Stock Exchange?
But the impact from the QE scale is much greater to our stock market. So at the moment, the number one impact seems to be coming from international fund flow. And you can see index move up by 125 to 200 points within 2 weeks and so forth. So if you look at the scale of the protest here, it's fairly small compared to that.
And how have Thai companies and the wider economy been doing?
Thai companies in general, especially the one listed in the stock market, is very resilient. The capital structure is very strong. The debt to equity ratio is only 1.27 to 1, which is very low. So basically, it has been proven since 2005. We've been able to withstand 9 external shocks quite well. And most companies listed in the SET were able to produce profit continuously and pay continuous dividends. So on the resiliency, I think we are quite strong. However, on fundamentals, we must admit that the export has been down. The stimulus package from the government has been slow, and some of them that worked in the past 2 years now, it's the package is not there anymore. So we still have a lot of work to do from now on.
Thailand clearly wants to establish itself as a regional trading hub. How do you intend to go about achieving that?
There are 2 areas of growth for our market. The first one is the growth of the greater Bangkok sub-region economy, which is much faster than Thailand. So we have a new listing called holding company, which allowed SET to raise funds for the growth of operation in those countries, mainly the Thai-linked company, because many Thai listed company has operation in those countries. So this way, this year alone, we have a power company from Laos listed, and in the next couple of months, we'll have from Vietnam, which is industrial estate listed. So there'll be GMS play within the SET coming out. So that's the first thing. Second thing is the growth from the state-owned enterprise. So we have a new listing called infrastructure funds to turn the existing assets into raising cash so they can get that cash to invest in the greenfield project. At the moment, there are so many state-owned enterprise which has project, but difficult to get funds because of the government borrowing limit. So this way, you can use the SET to raise funds, mainly securitize the existing asset through infrastructure funds.